in the mortgage market? Join us for another episode of FDM Brews to learn more about trends and updates in the mortgage industry that can help you get your clients pre-approved for the home of their dreams.
Good morning, gentlemen. It's good to see you,
morning,
Brett.
Cindy.
Cindy.
Brett, I think you got some extra flair with you today on that coffee mug. What does that
I
say?
have some extra flair, Cindy. It's coffee is for closers. That's what we're going to talk about today. We're going to talk about how to close more deals, right? ABC.
Always
ABC.
be closing.
Mm-hmm.
Actually, one of my favorite sales movies. It's great, right? You know, first place, second place is steak knives. We're not talking about steak knives today. We're talking about closing.
Oh, fantastic. Well, you know, one of the things I look forward to is mornings with you guys and your positive attitudes. So thank you for always bringing and inspiring people to explore new ideas and new ways to serve Downing-Frye's customers. We were talking a little bit before the show about Naples being a unique part of the real estate market, being was it the top 5% for cash, top 5% in the country for cash closings?
It is actually the top 5 markets, all cash, and Natish will share with us in a little bit about this. But, you know, in the country, 4 of the top 5 all cash markets are in Florida and Naples, I think, being number 1 or 2, which we'll go over today. But it's kind of crazy. And, you know, we're going to talk a little bit about today of how to take some of the power and put it back into our clients' hands with the FDM Purchase Power, right? You know, we're going to talk about how to compete against cash buyers. We're also going to compete about how to compete against the people that aren't cash buyers. And let's give our buyers an edge in what's happening in the marketplace today. Because, you know, we've talked about this in previous calls, is that as the market normalizes, as the market transitions, sellers were going to come back into the marketplace. And we anticipated more listings coming back into the marketplace. And as we talked about just before the show, you know, I just saw an article in the journal that popped up about listings suddenly spike as sellers are entering into the market, fearing that they have missed the super hot part of the market that we've seen, which means for our buyers that have been pushed out of the marketplace, there's opportunity. And we've been talking about this. We've been forecasting this for a while, is that listings and inventory will come back into the marketplace, and it's starting to occur. So how do we give our power back to our clients? Hey, the kitty's back. Yay.
Hey, we got
to have our mascot every day.
This is our second mascot.
That's another one.
Right. So that's what we want to talk about today. We want to talk about the FDM Purchase Power program, which is giving our power back to our buyers.
You know, and I want to just throw this out there for Downing-Frye's agents. This is a great concept for our first responders, our teachers, our healthcare workers, the people that we really want to keep in the community and keep a community strong. So I can't wait to learn more. Shall we jump in?
We should. Absolutely. There's our mascot. Yay. It's not a good day if our mascot does not join us.
Whiskers likes looking out the windows over here. So, all right. So we're talking FDM Purchase Power.
Every FDM Purchase Power, Cindy, as we talked about, right? The market is transitioning. And, you know, in reality, 2020 and 21 have been great years in the real estate business, right? Our agents and our lending partners, we've done great because the market was probably one of the craziest markets that I've ever been involved in. And I've been doing this for 37 years, I hate to admit. But the reality is a lot of buyers were pushed out of the market, right? They were competing against cash buyers, as we talked about. They were competing against, other buyers, all pushing for the same property without an advantage. Now, as the market normalizes, right, we're seeing more listings come back in the marketplace. How are we going to give our Downing-Frye agents the advantage? How are we going to give their clients the advantage? And this is what we want to talk about that today. So Tish, take it away.
Absolutely. So some of the numbers, that we've seen over the last couple of years. So 56% of first-time home buyers have made 5 offers and toured 15 houses, right? You're competing, as Brett mentioned, you're competing in this market against cash buyers. You know, we keep talking about hedge funds getting into the market. Hey, where's the money right now? It's in homes. So cash offers are beating the folks who are pre-approved with mortgages, and we're trying to figure out how they can stay on top of it. 25% of first-time home buyers made 10 offers before they had an offer accepted. 33% first-time buyers toured 20 houses before they had an offer accepted. When competing with cash buyers and hedge funds, it's hard to win. So now rates are increasing, and how do we stay on top of it? And how do we stay competitive in this market without having our buyers get discouraged or, fall back and stop with the search?
What's interesting here, Cindy, is one of the basic tenets we live off of, and we've shared this in FDM Brews before, is time motivation equals home ownership, right? Time, because they're competing, 20 offer, 20 houses, 15 houses they're looking at, so that's time. The hardest piece is providing the motivation, keeping our clients motivated, right? They look at 20 houses, they make 5 offers, they don't get it, they get discouraged. Right now, a lot of people were pushed out of the market. It's a great time to bring them back into the market. So how do we keep them motivated? How do we give them an extra tool that might spur more motivation? And that's really what we're going to talk about today. They're discouraged. We want to bring them back and give them hope and opportunity, because we believe it. Time motivation equals home ownership. So it's collectively up to us to make sure we keep them motivated.
So again, cash buyers have kept this market competitive. They're beating out all the offers and 15, 20 offers on a home. And it's usually going to be a cash buyer that wins, right? Buyers are being squeezed out by investment firms against hedge funds. They know where the money is. They want to go after real estate, and they're putting cash into these purchases, beating out the rest of the market. A rally of 35% in S&P has made many buyers flush with cash. We talked about a lot of folks selling their homes in the Northeast and selling stock, and they're cash heavy, and they're putting that money into real estate. Naples, we've talked about being one of the top 5 cities in the country that's cash with cash purchases. So folks are coming down into Naples and into Southwest Florida and buying properties with cash. Nationally, a record 30% of all homes purchased in first 4 months of 2022 were to cash buyers.
4 out of the 5 markets where cash buyers were in Florida. 4 of the 5 top markets, right? We talked about this. Now, what's interesting, Cindy, is we know cash is king, right? And a lot of our buyers, especially in that Florida market, were pushed out of the marketplace. So it's hard to compete against that. But there's 2 things that's interesting. And, I'm always guilty of this, but I focus on the positive and the opportunity, right? Now, the market normalizes. Now, Naples, I know some of the Downing-Frye offices, right? 80, 90% of the buyers over the last couple of years were cash. That's not always going to be the case, right? We have a couple things that are happening that's going to change that. One, most people don't realize this. We talked about this in delayed financing. Since January 1 through now, $7 trillion were lost in the aggregate between the 3 major indexes in the stock market. $7 trillion. So people that had cash suddenly don't have discretionary cash that they're going to use to buy real estate. So we're going to see that percentage of cash buyers drop, right? So that's one thing. Number 2, only 30% in most markets, 30% were cash. That means, now I'm a banker, so I'm not really good in math, but that means 70% of the market is using financing, right? So let me compete and give myself an advantage in that market, because even in Naples, even in Marco Island, that's going to transition back to a more normal marketplace. And how do we give our clients the opportunity to win? One, against the 70%, right? And then number 2, as the market normalizes in cash buyers, whether it's driven by loss in the stock market, or more affluent borrowers who are getting good financial guidance realize the best hedge against inflation is to keep their money out, leverage, right? We talked about in the delayed financing, borrowing money in an inflationary period is the best defense strategy. They're going to now go back to financing, whether it's delayed financing or even using financing when they initially do it. How do we give our buyers a distinct advantage in that? So here's the other thing that we talked about, and I think this is really important. Cash is king. So we went back and we looked at some research, and this is from Redfin. When you look at the research, oh my God, this is the 30% has never happened. Well, it actually has. If we look from 2001 to 21, 27 to 30% of the market has always been cash. Wait a minute. This is such a crazy market. It's an anomaly. It's never happened before. Well, no, it actually has, right? So how do we now give our buyers the ability to compete? What's odd, and I found this odd, is that in 2011, 12, and 13, as we were coming off the crash, when everybody thought it was bad to buy real estate, hedge funds and investors were buying real estate, right? We talk about following the smart money, right? Look at here. They were buying properties, right? And so we were competing against cash buyers then, right? So we need to compete against them now. And guess what? We'll need to compete against them in the future, right? So how do we create an advantage that allows us to do that? As Tish said, top 5 all cash markets. Look at that, right? Florida, Florida, New York, Florida, Florida. It's pretty impressive. Florida, Florida, New York, Florida, Florida, right? So as Natish said, people are leaving the Northeast. They've got cash when they sold their properties. They're moving down there. They're taking some of the stock market gains, and they're looking to buy in the Florida marketplace. So that, however, some counties, right, some areas, Marco Island, Naples, are an anomaly, 80 to 90%, coming back to 50. But even if it's at 50, that means half of the market out there is using financing. How do I create a better opportunity to compete against them? Now, mortgage rates. We hear this all the time. Where are they going? Where they're going? Where they're going? I don't want to burst everybody's bubble, but they're going up, right? That's what's going to happen, right? So we look at the interest rate chart and where we are, and perception is really important. One of the things we talk about is not interest rate, it's affordability, right? We need to focus on affordability. Rent inflation is going faster than mortgage inflation, right? If you're an investor, you own rental property, your property went up. Guess what goes up? Your property taxes, your hazard insurance, right? They're not going to eat those costs. They're going to pass them on to the tenant. So rent inflation has been very, very high. So where they're going. So, jumped ahead. So here, right, back in this time period, right, the early 10s, right, 12, 13, 14, interest rates were at 5%, right? We saw a dip, right? They got down into the 2s, and now we're steadily seeing them going up. So where are they going? The forecast, though, is for them to go up consistently. Fannie, Freddie, and the MBA expect interest rates to be in the high 5s, maybe even approaching the 6s. Oh my gosh, what am I going to do? Well, focus on affordability, right? Are you paying more? And it's still a very tenable market. When I started in the business, interest rates were 22%. People were buying houses, right? And that's actually true. You can go back and look it up. So actually kind of thinking I'm living through 1979 again now with gas prices and inflation and stuff. But people were buying houses then, and interest rates were higher. We're expecting them to go up. But now we've created a tool that allows our buyers, which Natish will share with us, allows our buyer to protect themselves while they're looking for a home as interest rates go up. Now, why is that important? Now, when you're working with other lenders, now I won't use names, but Loan Depot let's say Rocket Mortgage gives you a false pre-approval based on what the buyer said with no rate protection, and it's what I call a looky look, right? Here's what happens. Some competing loan officer, not the FDM team, they give you a looky look pre-approval. The rate's not protected. They haven't verified the income. It's basically a fake approval. Market moves away from you. Rates go up. Mortgage payments go up. What happens? Tish, a pre-approval is, or pre-qual is?
It's not valid anymore.
Right.
Yeah.
So think about this, right? In January, right? Or let's look at January 22. Rates were 3.44%. The monthly payment, for our example, right, principal interest would be $1,300. By, right, October, or currently, you lost $300 in payment. That means if your rate wasn't locked in while you were shopping, you might not qualify anymore. So how do you protect against that? We solved that problem, Cindy. How do we do that? Oops. Okay. Now, why is it important? We've been stressing for months that inventory would hit the marketplace. And if you listen to past FDM Brews recordings, we've said, hey, it's going to happen. It's going to happen. What's going to happen? It's that sellers who are waiting, right, are going to be fearful that they left the market, and they're going to put more listings. I saw an article this morning, listings suddenly spike, right? As sellers think they missed the opportunity, they're coming back into the marketplace. We talked about this, and I think it was actually our very last recording, that people that were waiting can now come back into the marketplace because inventory was going to occur. We need to re-engage them back into the process. So we're starting to see this trend. Look here at the last 3 columns, right? It keeps going up, up, up. And March, we're seeing a gain in listings in a year-to-year comparison, right? Now, We're looking at some of the markets here, double-digit home showings per listings, but that's starting to shrink, right? Because more and more listings are coming back into the marketplace. So we're seeing greater inventory. We're seeing pent-up demand of people that got pushed out into the marketplace, more inventory. How do we give them the power to win as the market creates opportunity for them? How do we do that, Tish, with the
FDM Purchase Power.
Purchase Power? Let's give the power back to our clients, Cindy.
Yeah, back to the clients, right? And we keep talking about the cash market. Cash is king, and that's caused a lot of buyers to be discouraged and kind of take a step back. And they've been sitting on the sidelines waiting for that opportunity, and that is what we have been trying to create, and that's what we have with FDM Purchase Power. So what the program means is it's a fully underwritten pre-approval, not as Brett talked about earlier, not a regular pre-approval. It's not just looked at by a loan officer. The credit, the income, the bank statements, the cash, everything is looked at by an underwriter prior to them even identifying a property. So the underwriters looked at the entire file pending a contract, and the underwriter gives a commitment letter. And now you can attach that commitment letter to your contract, to your offer, and submit it to the sellers. It's much more appealing. It's basically a cash deal at that point because all you're waiting on is title and appraisal, right? Once your contract comes in, you're good to go. You already know that the underwriters looked at everything else. As long as the property is good, everything else falls into place, and it's a quick close because everything's been reviewed already. So you're not waiting 45 days to close at that point. You can close in weeks. And on top of the underwriting approval, on top of the commitment letter, you also have rate protection with this program. Before you even identify a property, you can get your rate locked for 90 days. So you lock your rate ahead of time to avoid the rate spikes that are happening because here's the deal. You approve somebody for X amount, right? They're qualified for a purchase price, let's say of $400,000 based on the current rates and their current income. Now, they're in the market, they're looking for 60 days, 90 days, and we have seen in the last 60 days that rates have gone up considerably. So if they're waiting another 60 days and the chances of rates going up are very high, they could potentially not qualify for that same 400,000 anymore because now their payment's gone up due to rates, right? So now they may be looking at a lower purchase price. So this is where they're protected. They get a rate lock in for 90 days, rates protected based on their current qualification, and they can take another 60 days to go out there and find a property. Their rate is locked. They're just out there, worry-free, looking for a property. Then they go under contract and they close with that same rate lock within the next 30 days.
So there's two things that are huge about this, Cindy. One, it's not what I call the looky look, right? And Tish said it's a loan officer looking at the credit. Yeah, I looked at the credit and the borrower told me this is what they make. Here's what they're pre-qualified for, right? This is a firm commitment. That loan is approved. Now, it's subject to title, but guess what a cash buyer needs? Title. You can't close without title, right? You have to have the legal transfer of the property. Mm-hmm. So title is the same as whether you have a loan or a cash buyer, you need title. Most cash buyers are still going to look for an appraiser to make sure that there's no damage to the property, right? That they're not paying $400,000 above what the market is. So you're a cash equivalent buyer because the loan is done, right? Mm-hmm. Fully underwritten. We know your cash. We know your income. And underwriters looked at it. Underwriters approved it. We've given you a certificate. Now, we also now lock in that interest rate. So it doesn't matter. If interest rates go up, your loan's approved, right? If interest rates go up, your payment doesn't change. So you can buy with confidence. You have 60 days to find it. So you can look at your 20 houses as a first-time home buyer if you have to, and that's 60 days. Make an offer, get it accepted with a 30-day close guarantee. So you now compete, like I can get it done in 30 days. I like the tagline, find your home, the mortgage is done, right? That's mm-hmm. So you go buy with confidence. We got, what's it, who says we got this, right? Blue or brown or something. We got this, right? We got this. Find a home, your house is done. It gives you negotiating power. Now, you can compete with the cash buyer, but the 70% of the market that's out there that's using financing, you have a huge advantage because your loan is done. right? You can say, look, I'm equivalently cash buyer. I'll close in 30 days. You don't have to worry about my loan not being approved. I'm done. As long as the title comes back clear and the appraisal shows the house isn't falling down, you're done. FHA, VA, Fannie, Freddie, we can do those on all these products. And there's our mascot again. See, the mascot even likes it. She's
It's
happy.
so
She's going to go to your house. Yay. Okay. The process is a little bit different here. So we want to go through this, make sure everybody understands this, because this is a fully underwritten loan.
Right. So, again, the process is, in fact, a little bit different. So they apply for the loan as they normally would, complete the application. And now we take the application, however, as a to be determined property. So when we submit the loan to the underwriter, usually on a normal file, when we go to the underwriter, there's an address, right? But in this case, we send the file to the underwriter. Again, credit is there, income is there. Their bank statements, cash, all of that information is there. But as far as the property is concerned, there's a TBD address, and we submit, and FDM looks over. Well, first we lock the interest rate again, 90-day lock on the interest rate. We verify the income, the cash to close, the credit, and we send that application to the underwriter. The underwriter issues a TBD approval, a commitment letter. That's what you use, again, to put, you attach it with your offer. You're telling the sellers that, look, this is essentially a cash purchase. An underwriter has greenlit this deal, right? It's not just, and, we give loan officers a bad rap, but, there are great loan officers out there that do, they do a full verification. But unfortunately, there are other companies out there that, again, as Brett mentioned, just do a looky look, right? They're just looking at, the borrower can put anything they want on the application, mainly because they don't understand some of the questions. Is someone who is, making, let's say they have a salary plus commission plus bonus, all of that. They're looking at all of that as, hey, I'm making this income, right? This is the income I have. So they'll put that on the application. Now, those things get looked at differently by underwriters depending on the program. Sometimes you require a 2-year history for something, right? Bonuses and commission, you need 2-year history, but the borrower is thinking about what they make right now. They may have just gotten that job, but some companies are issuing a pre-approval based on that application without actually verifying income. So some loan officers get a bad rap because of that, but this is avoiding that. Now we're saying, hey, it's not just the loan officers that looked at it. It's not just the application that we've reviewed. We have had an underwriter actually go through all the documentation and verified the income, verified the assets, verified the credit. And now you have a commitment letter based on that information that you can attach to your offer. Once you have that, rates locked for 90 days, buyer goes out, searches for a property. Within 60 days, they find a property, go under contract, and we can close within the next 30 days.
I mean, what a deal if you can save that chunk of money in, over the next 2 months, right? Like just locking in a rate right now and protecting yourself. That's
absolutely, yeah.
Because rates are going up. And as I said, find your home. The mortgage is done, right? You can go buy with confidence. You can compete against everybody in the marketplace. That's what it does, right, Tish? It gives you offers that win.
Absolutely. So how is this different, and how do you stay above 70% of the rest of the market, right? 30-day close, first of all, within 30 days, honestly. And, once the file's been reviewed by the underwriter, like we said, all you're waiting on is title and appraisal. Once those things come in, we're ready to close. Everything else has been looked at by the underwriter already. And the mortgage is already approved, interest rates locked, and you are essentially competing with cash offers at this point. Stay on top of the market, be competitive, have your offers stand out. When you have 15, 20 offers, how do you stand out? And this is something that we've created for our buyers and, to help with this market that we're in currently.
Cash verified, done. Income verified, done. Loan approval, done. Interest rate locked, done. Go find your home. Compete against the cash buyers. Have a better edge than the 70% of the market that's using financing, and you can buy with confidence, Cindy. And that's important. It gives our buyers buyers that are discouraged because they lost, because, oh, hey, how do I compete? How do I be different? Now you're different. I'm approved. My rate is locked. I can go buy with confidence, and my offer now has a better chance to win. We can get them back. As inventory is coming back into the marketplace, Cindy, there's going to be a lot of opportunity. We want to engage anybody that, and we've talked about this, anybody that was pushed out of the market in 2020, 21, let's bring them back in. Let's give them this tool, give them motivation, get them encouraged, let them take advantage of the opportunity that's happening in the marketplace. Even though rates are going up, it's still an affordable opportunity to buy compared to rent. Let's bring them back into the marketplace today. And then when you combine this with our Everyday Heroes program, which gives a $10,000 grant to first responders, veterans, healthcare workers, teachers, police, firefighter, right? That's a huge win in this marketplace.
Absolutely. I mean, I think with this kind of information, you've really got it's such a spark for all Downing-Frye agents to be reaching out to those buyers that got squeezed out of the market, re-engaging, just connecting with prospective markets. We've got the opportunity. We can go ahead and lock in rates because,
absolutely,
as you said, they're going up. So
they're going up. And Cindy, that's a lot of what's keeping people on the fence now. They're afraid of it. Now, if you go back to them and your messaging is, you know what? Don't worry about increasing interest rates. We can protect you today and go find your house. So, because it's still an exciting time to buy, right? We just want to give our buyers an edge.
Absolutely. Well, I think this is a fantastic tool, gentlemen. And I can't wait to share it with our agents and see how we can get more buyers out there and get them into their dream homes, because this is a really great solution.
It is, Cindy. Actually, when you use Purchase Power, you can be a closer.
You can be a closer too.
You can be a closer. Absolutely.
All right, gentlemen. We'll catch you on the next one.
Thanks, Cindy.
Thank you, Cindy.
Thank you for joining us for FDM Brews. Our team is here to answer your questions. Just call 239-359-6590 or email us at dfry@fdmhome.com.